And we're back with the Texas Oil and Gas Podcast. We appreciate you tuning in to this episode 182. 182. I'm your host, Josh Shelton, my friend and co-host, Ryan Ray. Ryan, man, it's cold outside. We got a little bit of good news in the oil patch this week. Things are still pretty tough. How was your Thanksgiving, man? That's I guess that's the first question.
Well, I was at your house for Thanksgiving, so you tell me how it was.
Hey, that was supposed to be undercover, man. I don't want people coming in.
You don't want everybody knowing, huh?
No, they may end up, invading the Shelton household. And
No.
Newsom may hear that I had more than 6 people over.
Yeah, that commie. No, it was good, man. I had a good time. Then we had some family come in the day after, so that was good. I know you had family in as well. So,
Yeah.
How was yours?
So, you were there Thanksgiving Day, but my mom and my wife's mom came in. So we kind of hung out that day, and then we did a little. Well, I say we. My wife took the girls on a little Black Friday shopping that day with her mom, and we went and hung out. And yeah, me. Well, they went. It was like 10 to 12 or something like that. But me and the boys, we hung out. We came home, and I think we went and got something to eat. We just kind of hung out, man. Just being lazy, drinking coffee, eating extra food. It was fun.
I ate a lot of food. Hey, Josh, we got let me just put that out there. So we got a hit from someone the other day. Actually, Steph the intern also reached out last night. A couple people looking to sponsor the show. So we hadn't talked about that recently, but if you want us to have sponsors, then what you do is you do nothing. You do nothing, and we are going to bring on sponsors. If you do not want us to have sponsors, then what you can do is we'll link to this in the show notes. Is you can use our Texas Oil and Gas Substack affiliate code. So it's for the War Room newsletter. You get 30% off if you use this. It supports the show, supports Josh and I, and that will keep us ad free. So if you want to hear us say, "Did you know that mint flossers are made by Good Sense and they're very cool, and you could get them for $2.99?" Then yes, you could do that. Or if you say, "You know what, I want to hear these buffoons talk more about what I like to hear about," then go use the link. We will link to it in the show notes and sign up, and you get 30% off. And Josh has got all them kids, so sign up twice.
Or 3 times.
Or 3
Yeah. Yeah. Well, Ryan, I mentioned some good news. So I believe that this came out November 28th. Let me check oilprice.com. We were at $45 2 days ago. Let me check where we're at this morning. We're still at 45.12 as of this morning. So oil prices coming up. I pulled up 2 articles. Apparently, this increase in price has to do with the hope or the anticipation of the release of the vaccine. I would think so. Pushing the prices up, is this short term, a little bump in the stock prices, or is this going to be a long term thing? We're not really sure, but it's good to see.
Yeah, you got OPEC, who's been meeting this morning, and I don't know. Let's see here. Ellen has sent me the articles for our show this afternoon. Let me see what it says here. OPEC members extend to. This is from 40 minutes ago. So we're recording at 10:15, so 9:40. OPEC members agreed to extend oil cuts by 3 months, and so that would put them out until. I guess that's until March. By 3 months from January. So yeah, to March or April. So they're going to extend until then. So you have some good news there for the prices. Cuts will be extended at least for the next few months. Vaccine news. And so, the market is just wonky right now. And that's the scary part, is that do you really have faith, whether it's the Dow, the S&P, or the oil prices, that what we're seeing is a reflection of the fundamentals, or is it something that's overinflated because of the Fed pumping dollars into corporate bonds and all the various things that they have done?
Yeah.
New York City shut down the schools. I know they're getting ready to open back up some of their schools here next couple of weeks. But I'm curious to see this week, when the Black Friday numbers come out, what that does to the market. So if we had a strong Black Friday relative to last year, then it's probably good for the market. If it was a pretty abysmal Black Friday, then you might see some correction coming because folks are going to start to realize that maybe maybe the average consumer just doesn't have the type of funds to spend that they were hoping for.
Yeah, I've been seeing some mixed signals. I think I saw something that said that everything looked great in terms of the stock market, except for bonds, and people are saying that's actually very concerning because at some point these things are going to have to make some adjustments. So I did see, you got Pfizer, you got Moderna. There's another vaccine that was touted to be, I think, at 70%, which was much lower. That's supposed to be coming out. I think Russia, they released one that was, I think, 1% better than the one that America's talking about releasing. So there's a lot of talks going on about that. I'm wondering what exactly is about to happen with, Fauci said the schools need to keep the older kids out, but the younger ones can start going back to school. And he actually recommended they do that because they're not prone to spread it as much as was originally thought. Mm-hmm. So you got news like that that's coming out. So you got vaccine. You got if they open up elementary schools, school buses, schools back in person, if they start moving that direction, that helps. Obviously, we'd like to see it, more widespread. The older kids as well. But you see a couple of little things like that starting to develop that may end up pushing this demand, up sooner than what we thought maybe last week.
Yeah, I mean it'll push it up, but until folks, until the economies are open back up and folks are willing to get out and about, it's not going back to where it was. And so, I think we got one talking about the rig counts up 10 rigs again, and so that's kind of the balance is that you might have an uptick in demand, but then you have an uptick in drilling and production, then you're gonna offset that somewhat.
Yeah. Well, look, guys, I'm trying to give y'all some good news after Thanksgiving. I'm doing my best. I'm doing my best here.
Hey, the spin zone, Josh's spin zone. I love it.
Well, we got another article that came out, and you're probably wondering once we go over it why I bring it up. There's a Energy Journal oil and gas stimulus program shows promising initial results in Wyoming. What does that have to do with Texas oil and gas? Well, I found it just an interesting article just from the standpoint of seeing how other states were dealing with some of these problems. So Governor Mark Gordon created a Wyoming's Energy Rebound Program to give companies the money they need to complete specific projects. They include plugging, abandoning wells, drilling uncompleted wells, and recompleting. And it's $15 million in federal coronavirus relief money. They said there were 65 eligible applications. They far exceeded the $15 million budget, but it did give them some funds for these companies to start going in and getting to work. Now, when I look at that number, $15 million, that's really not a lot. I mean, that you need several more zeros there before I think it has a significant impact. But it's interesting to me to see that there are things that other states are doing to try to get some of these oil and gas companies producing. The problem is, I don't know if that's actually going to be a good investment, honestly, because if oil prices are where they are and you give this money out to some of these companies, are they actually going to be able to take it and turn a profit? That's going to be the question. Obviously, they can profit if the money they're given is free, but is it fake or is it going to be a real long-term benefit, a real long-term profit?
Right. So if I'm reading this right, so they got for plugging and abandoning, drilling uncompleted wells, or recompleting wells. Well, if you're plugging and abandoning wells, obviously that's environmental and
right.
Right. The other two though would bring barrels onto the market, and to your point, you might be detrimental. Like hey, you're broke. Here, we're gonna give you money so you can be more broke. It's you're putting the barrels on the market, which might be counterintuitive. Depending on how many barrels we're talking about, obviously, but it is an interesting thing, and and we talked about this back in March and multiple times. The government on some level, and I don't know what Wyoming did, so I can't say, but the government on some level is responsible for these low oil prices. Where would they be without government interference and stuff like that. No one knows, but we do know what happened, and so they are responsible. So should the government start bailing companies out and stuff, and you get this thing where you want to say no because you know how that goes, but the problem is that they are responsible, and the responsible party should have to pay damages. And so yeah, I don't know. It'd be interesting to see how it goes, but yeah, I do agree. 15 million is probably not a lot to really make a dent in much things.
Yeah, I mean, it may be more effective in Wyoming than it is in Texas. I mean, West Texas, that's not going to get you very far. It's it would need it would take a lot more. And on your point, Ryan, I think you have to agree. I mean, if the government came in and did the lockdowns, they forced these companies not to go into work, and they don't allow them to, but X amount of people to go in. They got to do something to offset it because they're the ones that are forcing it.
Right. The problem is that if the government, if the government had insurance, like commie insurance, when they screw you over, you go collect from that insurance policy. That would be it wouldn't work because everyone would be suing them all the time. But theoretically, you could at least be collecting from the insurance provider. In this case, though, the problem is to collect from the government, they're collecting from us, right? So we're the ones paying the government. So the government screws you over, and then you're the one that pays for the money back. And so it's that's kind of the loop that you get into that causes it a problem. So there's no good solution other than not letting the government screw you over, which is hard to do. They have the guns.
Yeah, hard to do. Well, here's an article. Fed Reserve Banks examine energy and the overall economy. Now, I don't know what most of our listeners think of the Fed, but I'm a little worried if they try to step in and do much, honestly. So they are looking at energy and trying to come up with some sort of solution. And again, this might be similar to what we were talking about with Wyoming. This may be from a federal level. Trying to figure out what they can do to help these energy companies, which it'll be the same situation. If the government is at fault for forcing some of these companies to shut down, then they have to make some sort of move. But where oil price is right now, heck, if the government wouldn't have done the lockdown here in the States, but every other nation on earth did, I wonder how it would have affected the oil price.
Well, right. That's what I'm saying. So we don't know. That's the problem, is that people can say, well, if you were to, not have done shutdowns, then the economy might have been devastated because people just stayed at home. We don't know what would happen. So it's hard to speculate on what people would have done because you don't know how the media would have portrayed it. We just don't know. All we know is what happened. And so that's the problem. As far as the Fed examining stuff, that's, the issue with the Fed is, the Fed has a great record of, supposedly having the insight and completely being wrong. So them examining the oil and gas industry or anything else is, basically, I don't want to say it's zero, but it's not exactly where I go to get my insight on what's going on, because they're tied up with all the big banks and all that stuff. So it's not a zero, but it's not a whole lot.
Well, again, this is another one that's a little bit, a little further up north in Canada. The oil and gas sector sees record job losses. So there's a tally that came out that 37% of oil and gas companies in Canada resorted to permanent layoffs due to the pandemic-driven oil price and oil demand slump. 37% have permanent, or laying off people permanently. And I expect that number, if we don't see it change, Canada wasn't too friendly with their oil and gas companies already.
Mm-hmm.
The companies that are thriving or were thriving are probably not doing so by wide margins already. So this may put almost an end to the, Canadian oil and gas companies.
Yeah, that's gonna be interesting. So, like in the U.S., we talk about the layoffs. Even if they call them permanent, we think, okay, well, they're calling them permanent. But if the price gets back high enough, then they'll be back in the game. In Canada, with all their regulatory problems, you have to wonder, will those jobs come back? Because it seems like Canada is really tightening the grip on, you know, on how they on pipelines and production and stuff like that. The other thing, though, that might be good for us down here south of the border, way south of the border, is that if Canadian barrels come off, now they have a different type of oil up there for the most part than we do, but if those barrels start coming off the market, that could be good for us. Barrels off is barrels off. Now we'll have to get the crude quality debate and all that stuff today, but the general premise is that if barrels are coming off, then it will increase demand. So I'd be curious to see how Canada handles that the next few years. But I wonder, Josh, right now, next 2 to 3 years, how much you're going to see maybe some of these conversations shift to where you might see things really tighten up as far as environmental regulation, pushback, things like that. But then by 2023, 2024, things start to open back up because people are just going to be sick and tired of just having their lives ruined, whether coronavirus or regulations or whatever it might be. And I mean, if you just look globally, there's protests that are still happening globally all the time that people are just pissed about the coronavirus stuff. And so I think in America, we're kind of being told to be docile and sit at home and you're crazy. But even the more socialistic type countries seem to be pretty frustrated with how their government's handling things. And they're already socialist.
Yeah. Well, there was I went in on the Inveris website. I was doing a little bit of research, getting ready for the show today, and I went and I looked on one of a blog post they have from November 16th, and they look at oil demand at 2024. In this article, they look just November the 13th when they're writing this. They said for the first time in 5 years, global oil demand is set to average just over 100 million barrels a day annually. And it said that so just to clarify here, by November 2024, they're supposed to be averaging that. Okay, so it's basically a 4-year look. And they're looking at where we're at right now, and they're saying, well, with the way oil demand is taking a hit, the way companies are being hit pretty hard, the way pushes are being moved to these other forms of energy, they're wondering what the outlook of oil is going to be long term with looking at the pandemic and the demand and the transition that we're seeing to some of these other forms of energy. But overall, I mean, they're looking at 2024 and saying that it is going to hit over 100. So they're, I think, at least acknowledging that oil does have potential to grow a good bit. But I don't know. What do you think about it, Ryan? I don't think they're looking. I don't think they're looking at the long-term transition to oil in these third world countries and the amount of opportunities there are there. I think they're I guess more convinced with some of these alternative forms of energy and the impact that they're going to have.
Yeah, so let's see here. Ultimately, this is from their thing. Ultimately, while the world is back to pre-pandemic level of oil demand, this accomplishment will likely be fleeting as the economics and availability of alternative technologies improve, enabling the developing world to get on the off oil bandwagon. So in the end, 100 million barrels a day certainly isn't what it used to be. I think that this. Listen, 2024, you can come and call me crazy, but I just no. So it's hard to predict the next 3 to 5 years what's going to happen. In the sense that we've kind of reshaped how the world is and how it's working. So what's going to happen 2021, 22, 23, 24, I don't know. I would think that things will bounce back quicker than we might believe, but maybe we have a Great Depression type 10-year period. I don't know. But by the time me and you are dead and buried, assuming we live to be the average life expectancy of like 80, whatever that, 75, 80, we will be well past 100 million barrels a day. It's just not possible for that not to happen. And so I think, you got to think within Veris that one of the things that they're trying to balance is they have a big trading platform. And so they're trying to get these traders to come on there and buy their data. And so, but,
well,
go ahead.
I was about to say, that's the point that I was going to make. So the one little part here, it says investors in the advanced economies are making ESG more of a priority, which is environmentally sensitive environmental sensitivity, essentially. So it's you
Right.
want to look green, right? You want to
Right.
look like you're supporting these energies. And if Enverus can position themselves as being in that camp, then they can get more investors to come on to their platform or to invest in their business model. So yeah, I think that's an excellent point that you make. Is um, they have to do what BP did. You know, they're playing the same game.
They don't have to, and they may disagree. They may say that's not what they're doing. But I mean, I just think that if you're sitting here thinking that, by the time, so this is 2020, we're supposed to be dead in what, 40 years roughly, right? 40,
Yep.
50 years. So 40 years. So we're at 2060. If you're telling me that 2060, we're not going to be well past 100 million barrels a day, let's sit down and just tell me how much, how little poverty we're going to fix over the next 40 years, 30 years. And I just don't buy that. If you look over the last 100 years, poverty alleviation, it's gone gangbusters. Now there are people who are starving and they're in bad spots. I'm not denying that. But to think the next 100 years we won't do better than what we had the last 100 years, when the last 100 years we've made the most technological advances ever. We went from can't fly a plane. Okay, it's 120 years now, I guess. We went from can't flying a plane to on the moon in the same century. Couldn't fly a plane to on the moon. On the moon, Josh. We got on the moon. Like, think about that. You couldn't fly a plane, and we landed on the moon. I mean, people were alive for both of those events. I mean, I'm not saying that you could remember both, but people, if you were born, you could have been born early enough to live through both of those events. That is a radical shift. And so, when you look at where we're going to be by, what I say, 40 years from now, so 2060, when you look at where we're going to be 2060, how much different will it look than what it will today? Will we go from, can't fly to on the moon? I don't know, but the efficiency in which we can do things and we can communicate, we can, move logistics around now is far greater than what it was. And we have revamped the world. China has brought 400 million people out of extreme poverty. 400 million in the last 40 years. I mean, it's crazy. So,
I hear they got a few more.
yeah,
Yeah. So I mean, if you're just looking at those numbers, I mean, if China, I mean, if they add another 400 million to that list,
right,
they would still have 400 million
exactly.
there. So.
And the bottom end of China's, and this is what you have to realize, the bottom end of China's middle class makes like $3,500 US a year. 3,500 for the year. That's US dollars.
Yeah.
So, as their middle class becomes richer, which over the next 40 years you would assume it does, they're going to have more demand for oil and gas. And so that, yeah. So, I don't. Could it be that we have again a Great Depression, like 10-year period, coming up? Yes, that is quite possible. I don't, have no idea about that. But by 2040, I can't imagine that we're not well beyond this. And me and you talked about this the other day, I think offline. One thing that people should consider is, once we invented the airplane, we could fly. If everyone stopped flying, we could go back to flying when we wanted to, because we understood how to fly. Once we invent the iPhone, if we quit making the iPhone tomorrow, they just ban it. The U.S. government, the world government's banned iPhone for 3 years. Well, if they lift the ban 3 years from now, they can go back to making the iPhone. Now, there's a sense in which you miss the 3 years of development and processes and technologies and all that stuff, right? But the foundation that the global community is on now, as far as technology, being able to communicate, move stuff around, is far greater than what it ever has been. And so, could things change? Yes, but we have the ability to launch from a far different spot than we did in the Great Depression. In the Great Depression, we were still very much, we were industrialized on some level, obviously, but we weren't nowhere near what we are today. So, the progress we made, I guess, is so substantial, it's hard to even think about.
All right, Ryan. Well,
my grandfather, real quick, lived through the Great Depression, fought World War II, saw someone land on the moon, lived through Nam, and he lived long enough to see the iPhone.
Yeah, it's unbelievable. That's crazy, isn't it?
Right. I mean, it was early models of the iPhone, but he lived long enough to see the iPhone.
Still, that's crazy. Yeah. I mean, what we gonna tell our kids? We lived through the dial-up phone.
We're gonna tell them we lived through the 2020 year of hell.
Yeah, the 2020 crises,
Yeah,
uh, tyrants,
yeah,
viruses,
exactly. That's what we're gonna tell them.
and oil price and wars.
We saw the price will go negative. That's what.
Yeah, that's gonna be the major marker. Well, Ryan, we got a couple stories here for the Texas Roundup. Not a lot. You already mentioned one of them. Nation's rig count is up by 10. So you see price tick up. You see the rig count also increase with it. So I expect we're going to see that happen. If oil price goes back down, we'll probably see that number drop a bit. And last but not least, we have Inverse again. So I was reading on their blog, and there's another story I found where it mentions the Houston Chronicle names Inverse winner of Houston Top Workplaces 2020 award. And again, Ryan, I think, and I'm not saying I blame them, so I'm not trying to accuse them of anything, but I think, playing the ESG game or trying to position themselves in a certain way, it does help. It does help get things like that.
But I think, yeah. I mean, I guess it depends on what when you're playing those games. So if anyone wants to come out and say that they're working on wind or solar, I don't care, whatever, good for you. Like, there's no problem there. I think the frustration on my part is to deny the future of oil and gas, at to pretend like, or let me say this, say it this way maybe, to promote renewables at the expense of oil and gas, right? So if it would be renewables, I got some renewable stuff I deal with. Cool, there's no problem there. I don't, whatever. But to deny the reality of oil and gas is, it's just, it's not helpful. And I don't know how these big analytic companies can't see that, unless they just think global poverty is going to be far worse than it ever has been, how we're not going to be better. And so if you think that things will get better, then we will use more oil and gas, barring some technology that currently doesn't exist. So if you're saying, well, some technology that doesn't exist will exist, well, sure. Well, okay, great. But I'm counting on living to 80, but some technology that doesn't exist could extend my life to 200. I'm not counting on that, though. And so that's the problem with their predictions, it seems.
Yeah, I think you're right. I think, and that'd be the question that I have, as far as in terms of honesty. If you were looking at the situation and you knew that giving a plug for green energy would get you more investment, but you also know that there are these third world countries that are in intense poverty right now, and oil and gas is going to be the key for these countries to step up, take that next step to, it may start with coal, but there are steps of that they're going to need to take in order to begin to climb out of poverty. And oil and gas is a key to that. And that would also entail that oil demand is going to increase by more than what the green energy folks are saying that it is over the next 30 years. And yet you still say that would be bad. That would be more than just a reputation. You actually know the truth that oil is going to increase in demand, and yet you're still saying this in order to save face.
Right. So it's important to say it. Well, if you want to talk about cheap alternatives, or maybe solar, wind for an impoverished nation today, that's great. But to pretend like they're going to be able to build their society off of that stuff is probably not likely. And I just put this in the links, and I'll put the show notes. If you go look at this is according to the CIA. This is the total fertility rate. If you go look at that data and you see who is above the replacement levels, where the people will be, 20, 40, 60 years from now as they replace their populations, it's a lot of emerging markets. A lot of
it is.
Maybe they will level off 40 years from now, but their populations are growing, whereas other populations are not. So, anything else, Joshua?
No, I think that's it, man. That's all. That's all we got for the roundup today. I didn't have much else to pull, so there wasn't really a whole lot out there.
Okay. Well, again, if you want to hear ads on this show, then do nothing. But if you do not want to hear ads, then consider going. It's $10 a month, 30% off. So it's $7 a month or 70 bones for the year for the War Room newsletter. Josh and I will be back next week. Yeah, back next week. And until then, keep climbing.